you're running a multi-6, maybe 7-figure business, and you've got a big pile of cash that comes into your bank account. You're feeling great, you feel secure. But the truth is, you're not. Half of that money is already accounted for payroll next week. Another third of it should be going to taxes, and the rest is already almost on its way out the door paying the rest of your business's bills while you're left with empty pockets. If you don't know what money is yours to keep and what money is yours to spend, you are going to spend yourself into a hole. Look, I've helped business owners in over 50 different industries improve their profitability. Today, I'm going to talk about 3 different financial mistakes that I've seen business owners make over the years. The first mistake I see is the 100% delegation of finances in the business. I get it. You got into your business probably because you love what you do or you love your product. You didn't get into it to learn about all of these numbers or to become an accountant with an accounting degree. I totally understand that. So what most people do is they then completely delegate the financial, boring responsibility to someone else. That might mean someone who's completely managing the money, managing who gets paid when, doing transfers, running payroll, everything. And most of the time in these situations, when I talk to the owner, they have no idea where they stand financially. I say, how much do you have in the bank? And maybe they can tell me that, but they don't know how they got there. They're like, cash flow is tight and I don't know why. Or our payroll is a lot, but I don't know what it is. What ends up happening is then the owner is flying blind. They don't know where they actually stand. So they don't know how to make those smart financial decisions. They're just shooting from the hip, so to speak. And the even more unfortunate thing about this setup is it really opens you up to some severe liabilities. I have seen business owners get embezzled from. I've seen people that they've handed the finances over to mismanage it, pay bills incorrectly, or they start bonusing themselves extra, kind of doing some shady things under the table like that. And it's because the business owner doesn't want to look. They don't like the numbers. They don't want to look at a P&L. They don't want to know what's happening on a weekly basis. They just want to go run into the sunset and do the fun parts of the job. But the thing is with your business, you have to know what's happening financially. So even if you have someone running the money and taking care of all of that for you, you need to be in the know. You should be getting at least a weekly report of this is what came in. These are the bills that we're going to pay. You should be approving what bills are getting paid truthfully. And most importantly, you should be the only signatory on the account, you or a spouse. But I would never make an employee a signatory. Again, this is a huge liability for you that if something went wrong, if they got upset or happened to be a bad person that you didn't realize, it does happen, they can go and write themselves checks. All that to say, you need to know what's happening on a weekly basis with your finances, and you need to be the one giving the final signature. At some point, at some level of growth, yes, someone can start doing that sign off, an official CFO. But if you're under $3 million, you probably don't need that official CFO role, and you should be the one giving final authorization. All right, if you're watching this and it's making you a little queasy because you know that your finances are in order and you know you don't actually have the knowledge of where you stand and control over your finances, I want you to click below and download our free cash map. This is a free template for you to fill out so that you know exactly where you stand financially, what percentages you should be aiming for your type of business, and you know exactly where you can and can't spend money. So click below, download your cash map today. The second mistake I've seen is giving away too much to an employee too soon. Of course, we want to compensate people fairly. We want to give them commissions. We want to give them bonuses. We want to reward our A players. But what I've seen happen is someone give away a percentage of revenue without really thinking about the consequences of that. I had one client where she was giving away 10% of all of her closes to the person doing the administration of the closes. That's not even the person who was doing the actual closing. The business owner herself was closing, and she was just giving this person 10% to manage the follow-up of collecting payments and anything like that. But you're literally giving someone 10% of your company of revenue, not even 10% of profit, 10% of revenue, just to shuffle some papers and collect some payments. If you want to bonus them, that's fine, or give them a smaller percentage, but that person does not deserve 10% of your revenue. I've also seen this in bad commission commission structures for salespeople. I had another client that was on a recurring basis where he had a pool of clients that would come back to him for recurring services. He was giving 10% of all the sales ongoing to the salesperson. So what would ended up happening was, even though yes, the person should get commission for that business coming back, that salesperson eventually got maxed out. He got comfortable and he stopped chasing new business because he was already making enough commission just from people coming back. And additionally, my client was the one taking a lot of those orders too from recurring clients. So that person wasn't even doing anything to get that business to come back. So you really have to think about, when you're making a commission structure, that it's fair for both sides. I want it to be fair for the employee, but I also want it to be fair for you, the business owner. So before you give someone such a permanent slice of your pie, you really have to think about those repercussions. I always like starting at lower terms and then making some sort of milestone or some sort of bar they have to hit before it bumps up to another tier or they get rewarded with more commission. Otherwise, you end up with lazy employees. All right, mistake number 3 that I see is having only one business account for your finances. This means all of your money goes into one account and all of the money goes out of one account. When you're running your cash flow this way, it makes it really hard to plan and see what you can actually spend. You get a big influx of cash from a contract or your merchant deposits, and then you think, okay, I've got this much to work with, and it all goes out the door. This is how you end up as a broke multi-million-dollar revenue owner. This is how you end up as a poor multi-million-dollar owner, because you aren't able to actually see what you can pay yourself when, what new purchases you can make, what bills you can afford to pay right now. It all is very muddied and unclear. So the solve for this is the Profit First cash flow management system. I am a certified Profit First professional, and I'm telling you, this is the easiest way for you, the business owner, to really take control of your finances and understand what's happening with your money without having to go get an accounting degree and fully understand your balance sheet and your cash flow statement and how they correlate to each other. We've got tons of videos on the Profit First system on our channel that you can check out, but the rough idea is that you're actually having a series of bank accounts, kind of like a bucket or envelope system, so that you can assign money to where it should go and where it should be spent. Part of this is having a specific profit bucket so that you are setting aside for your profit instead of crossing your fingers and hoping that end of the year you get to take a distribution of some sort. You've got your income bucket where all the money comes in. It's separate from expenses so that you know what you can actually spend from the expense account. You have an owner's pay account where you pay yourself. Your salary is guaranteed. You've got a tax bucket, so you make sure that you're all good with the IRS. When that bill comes April 15th, you don't want to throw up because you already have enough money set aside for it. And then finally, you have an operating expense account, and this is how you know what you can actually spend. So the idea here is, let's say you get $80,000 in, instead of it just being in one account and saying, yay, I have $80,000, I'm gonna go buy some new computers, I'm gonna go buy some furniture, I can definitely afford the rent on that bigger space. Whatever financial decision you're looking at, the money should actually be going into these buckets. So let's say you get that $80,000 in, and instead of just going and spending it all, after you've divvied it out into each bucket per the percentage that should go into those buckets, you actually only have $50,000 in operating expense. And then after you run payroll, you only have $20,000. And then your rent comes out and you only have $12,000. You see where I'm going with this? Now you can actually see, wow, I actually only have $12,000 to work with now, and I need to pay these subcontractors or these bills. After everything's done and paid, maybe you only have $3,000, and that's not enough for that fancy truck you want to buy, or the new hire that you're about to pull the trigger on, or that bigger lease that you are about to sign. Now you can see what you can actually afford in the business while making sure your personal bills are actually taken care of. All right, so how do you fix your finances in your business without becoming a full-time accountant? The first step is Profit First, and that's always what we start with our clients here at Matterhorn, because without profitability, the engine that is your business will not be able to run. Profit is like the gas that feeds that engine. Once we have that down, we can move into our 4 pillars of business basics, where we get the business organized. We know exactly who does what and where your attention as the owner and founder should be. Then we can create strategy and action to actually move the business forward. How are you going to actually make progress and take action with what we're talking about? From there, we can monitor statistics so that we know what's working, what's not working, and what lever needs to be pulled next. And finally, we make sure that team ownership is in place. This means that your team completely owns their roles, they're fully responsible for their area, and it is fully off of your plate. You have a team that loves coming to work and that you love having there, and this whole cycle I just talked about becomes self-sustaining and building on itself. So the first step of this path is profit first, and that's why I want you to start with our cash map by clicking below and downloading it today. This cash map also comes with a free implementation call. So if you look at this template and it makes you go cross-eyed, don't worry. You can hop on a free call with one of our specialists who will help you fill it out, go over your specific business and your situation, and make sure that you have a plan in place. So click below, get started by downloading your cash map today.